So hello everyone, and welcome along to this live webinar. And today we have a special guest, Simon Misiewicz. Hi Simon, I will let you introduce yourself. Simon is the founder and director of Optimize Accountants, and we have great topics for you today. Hi Simon, how are you?
Very good. Thank you very much for having me on your tonight's webinar.
Thank you for joining. Simon, can you perhaps tell us a bit about your background, experience, just for the attendants to know?
Yeah, of course. So my name is Simon Misiewicz from Optimize Accountants. I am a qualified accountant and a qualified tax advisor. Yes, there are different qualifications for those two things. I always say that a tax advisor is not a good accountant and vice versa. I typically am not a very good accountant. I'm quite good at tax advice, but I can't stand the thought of putting a set of accounts together. So they are very different people. I focus in two different areas. So I focus in property, UK property typically, as well as US actually, US property as well, or they call it real estate property. I'm a dual UK and US tax specialist. So I'm qualified in both jurisdictions. So I work a lot with HMRC and the IRS in regards to real estate property investments and people using limited companies or buying properties in their own name. There are many taxes that landlords and property developers always need to remember in regards to stamp duty, land tax, VAT, income tax, capital gains tax, corporation tax, inheritance tax, and many others like ATED as well. So there's a lot of taxes that people need to be aware of. We specialize in property. We don't look at other types of businesses.
Are you going to the gym?
Yes.
It's not open.
Oh, I'm not sure who that is.
Yeah.
But I've pretty much done my intro anyway. So back over to you.
All right, thanks, Simon. So we actually prepared a list of topics around the property investment that basically we can use your experience and knowledge to answer some of those questions. And also we will demo a landlord in some aspects that basically can help answer some of the questions. So let's start with the first one. So how can I determine profitable investment areas with good ROI? So over to you, Simon. What are your thoughts on this topic?
Yeah, and we'll use your tool actually extensively throughout this conversation, because I think it's whenever people talk about property investing, they typically will talk about two different returns. They'll talk about return on investment, and what I mean by that is how much profits you make from a property for the investment that you make. So they always use this ROI as a strict calculator. Typically, we find clients make anywhere between, I would say, 6 and 12% ROI. Typically, you will make lower ends of return on investment on single let properties. You'll make greater return on investments for houses of multiple occupations, such as HMOs. And then even further, you can make even more money if you do it right in terms of service accommodation or holiday lets. Now, the other side to that coin of ROI is then capital growth, and where can you find the best return of on terms of capital growth? Typically, it's been London in the past, probably not so much nowadays. But there's never been really a tool that clients often will ask me that question, but there's never been a tool that I could really focus in on until I saw Landlord really give us reports that can do that analysis. We can't do that. We just don't have the capability, the technique to do it right. But Landlord does a great job. So back over to you to kind of go through that.
Yeah, so the way to source properties on Landlord is from the invest part of the platform. If you go to on-market properties, you'll find live listings from agents, and we get new listings every day. So you can get some information about the property, about the price, and then you can start analyze the deal from clicking from the rent analysis, click adjust, and then you will see the metrics based on the platform defaults. So you mentioned the ROI, Simon. I think the ROI, we look at it in two different ways. One is for the first year metrics. So what is going to be the ROI for the short term, and what is going to be the ROI for the long term? So for the short term, basically, it will take into account mainly the cash flow of the first year, or if you did some renovation that improved the value of the property, this basically will add increase your ROI in the short term. So for instance, if you purchase property in this price, but the actual value is 120, then you can see that you already gain nice amount of return in the first year. The long-term ROI will take into account, as you mentioned, the property appreciation. On landlord, when you analyze the deal, you will get some information about the property and some information about the area. And based on the postcode information, and you can go to postcode information page to get more information about the postcode. So you can see in this specific postcode, you see nice capital growth even in the last 2 years. So the assumption will take the average of the 5 years for the long term, and based on that, we calculate your ROI. But of course, that you can change this number to see, let's say that you think that will be only 3%, to see how it will impact your ROI for the long term. And you can also define what is the long term. Is it 10 years, or it can be even 20 years or less? And another parameter is the IRR, the internal rate of return. So if you want to measure your yield or the cash on cash, so basically the yield on investment, you can do it mainly for the short term. For the long term, you need also to take into account the property appreciation, inflation, and other parameters. And the IRR basically takes those into account. So it's not just the cash flow year over year, but also the property appreciation. So there is a formula for that. You're an accountant, Simon. I believe that it's something that it's a bit complex, but we do it for you.
Yeah.
And we calculate the IRR for you, so you can see. And the good thing with landlord is that you can save the deal as a prospect deal. And then on my portfolio, you can just select the prospect properties, and then you can compare two different properties based on their metrics. So you go to the performance view, and then you can compare the next 12 months cash on cash, the next 12 months ROI, what will be your equity in 10 years, the ROI in 10 years, etc. And you can add columns to this view if you want. So, and then you can compare each, and you can also order by any column you want. And so this is basically the way to source properties and analyze the deal. And then you can store, of course, the details and the metrics, and you can compare more than like one deal to each other. So so this is it. Let's go to the next topic. So how can I create a monitoring report that provides property updates in a specific area based on my criteria? Simon, if you have something to say about this, like in general, please do. Then we will go to the demo.
Yeah, I think the reason why I pose that question is, again, it's back to if people use Zoopla or Rightmove or some other tools, spreadsheets are probably the worst. Is that it's difficult to look at your portfolio as a whole, and your tool you just demonstrated was a great way to do that. So monitoring that type of thing. What's also good, it's in terms of your tool, which I don't think many tools out there will do it properly, whereby if a property has fallen in value, or if a property was on the market but then has fallen through and now back on the market, and you setting up feeds is really good. As an example, Redfin, which is anyone who's into American properties, I use that for myself. And that really does have a good tool whereby you can get alerts sent into your inbox. But again, it's quite difficult to track those properties against the ones that you're looking at to make those comparisons, which again, without trying to oversell your product, does a great job at that, if I'm honest.
Yeah. Thanks, Simon. So yes, and so just like to emphasize how you can track like on an ongoing basis properties that you like. So you go to the on-market properties or the auctions properties, or property lists, which you need to perform search based on specific category of properties. And then you just, after you find the property you want to look at and get alerts, just click on add to watch list. And this is part of our premium plan. And again, like the people that are now live in this webinar, you will get the coupon. You have it on the chat, and we will put it again in a few minutes, or sorry, you can put it now again. And if you don't have a user yet, you can use the link to sign up to get the 60 days free trial instead of 30. So in the watch list, you will have all the properties that you want to monitor over time. Currently, the alerts that you get are mainly for auction properties. So you will get alert when the auction date is due. So like reminder before the auction date, but soon we are going to release, hopefully next week, a sourcing alerts that you will be able to track properties in terms of price. So you will get alert on properties on your watch list if price was increased, price was decreased. And also based on the criteria that you will define, you will get alerts on new properties based on the criteria. And the criteria can be location, can be property type, can be number of bedrooms. And based on that, you will get alerts. And then you can keep track on your search and sourcing needs. As you can see, we get properties, and when we get new property, we mark the date, so you can see when this property was added to the platform. And yeah, you can just sort it here. All right. So let's go to the next topic. How can I ensure that the property I want to purchase offers a favorable return on investment? Simon, over to you. Your thoughts?
Yeah, and I think we've kind of swapped them around actually, because I think we've answered this question in the first question base, whereby you do the deal analyzer to go through the return investment. So I think that we've answered that. What I guess I was asked in the first question, which I didn't probably word my question correctly, was how do I know which area to invest? And let me give you an idea about this. But whenever people talk to me about where do I invest my money, it's typically being where I live, because I like to know where my properties are, and I want to be able to drive around them if I need to. So that's my criteria. But for some other people, it may not be a requirement to be able to drive to the properties. It may be purely based on return investment. Where do I go? And we have a lot of foreign investors. So we have foreign investors from the States, as you can probably appreciate, Canada, from Hong Kong, and Dubai. And what their question would be is, well, I don't know the UK very well. Can you tell me where the best return on investment is? And I typically would say, well, actually, the rental yields you get are pretty northern areas such as Liverpool, Manchester. You've also got Leeds, which provides a good return on investment. And I didn't know if your tool provides such a kind of a map type functionality. It's probably difficult to get something like that, to be honest. But if you could do a search to say, well, what property is on the market that has a greater return on investment of, let's say, 10%? I'm not sure if that is even possible.
So in Lender right now, no, you actually need to analyze the property and understand like the potential return based on the market assumptions, based on the postcode, and you can put your own assumptions. there are tools that are focusing just on sourcing, and you can find like heat maps and things like that. And so we currently don't provide it, but I think that if you have a certain criteria, so that you know basically what you are looking for based on location, property type, perhaps range of prices, etc. Then you can get the data you need in order to make better decisions and understand the potential return of each deal. But yeah, I think it's definitely something that can help you, and watch this can track on an ongoing basis. So let's go to the next one. This is very important. So what are the typical investment costs for a property, including the deposit, refurbishment, financing, and legal expenses? I will add, although we are going to speak about tax, I think, Simon, this is your area. And I think this is something that property investors should take into account when they are in the process of purchasing a new property. And we always say, when you use the deal analyzer, just make sure that on this area, the purchase details, you put all the associated costs with this purchase, because basically you need to be more conservative and also plan for the unexpected. So you have the closing costs, legal fees, inspection costs. Also, you can put some buffer, and then in the refurb costs, you can, using landlord with our premium plan, we can create actually a schedule of work. So basically just specify each item and the cost, and you can also put the date to track the project, and by that you can take into account all the costs if you are going also to perform a refurbishment project. And of course you have the deposit for the mortgage, you have the mortgage fees. So our deal analyzer basically takes everything into account. So Simon, over to you in terms of the cost and also the tax issues when you purchase a property, and what basically you need to take a look at.
Yeah, and I think that's a great introduction to, first of all, is the tax structure you should use. I've just issued out a newsletter, which some of you may have read, where I talked about people jumping in too quickly with the use of limited companies. It seems to be the most sexiest subject about. So, using a limited company with discretionary trust is certainly a hot topic, even if you put it into Google Trends right now. And my nervousness with marketing is typically FOMO, fear of missing out. Someone, if you're in a circle of friends, networks, and they're all talking about a limited company with a discretionary trust, then your instant reaction is, I must be missing out, therefore I must have one, without really understanding what they are and how they're effective they are. So please do get some tax planning, even legal advice in terms of what you do, how you invest, and how you structure yourself way before you start to invest in property. Because if you make a mistake with that, it's very difficult to unravel it. And you could have a ticking time bomb in place without really realizing what's happened. So please don't jump into any type of investing until you know the right tax structure for you to use. Whenever I see people, and I love this tool, I'm a geek, so sorry, but I do love tools. I do think, and I use them very well, but it's really critical that you stop using spreadsheets and you start, especially if you design it yourself, because you can do a job on yourself. I don't know if you have ever heard of that phrase, but do a job on yourself means that you will tinker with the spreadsheet to make sure it delivers you the return on investment that you're looking for. Using a tool that's been set up and designed and it plugs in some of those numbers for you, it's really going to keep you in check to make sure you don't fall foul of making such mistakes. The big thing about, and it was great that the tool talks about projects as well, because when people talk about doing works on property refurbishment, the one big challenge I have with investors right now is looking at your costs of refurbishment and getting maybe 2, 3, 4 quotes. That many, because many builders will vary in terms of what their costs are. Please don't accept the lowest price, because two things will happen. If your specification isn't exactly understood by each of the builders, so they all know what they're going to do and all work to the same standard, you may have a variation of cost simply because of the specification was wrong or misunderstood. So that's a huge thing I see people really screw up on. And then a builder might quote you £10,000 for a kitchen outfit, extension, whatever, of that kitchen. But then it ends up being £35,000. And the reason for that is because you keep changing things, or you didn't understand the original specification and you have to then change that specification anyway. So make sure that you take your time to understand specifications as much as possible and work with other property investors who've done refurbishments. I even work with builders to help me build up quotes. Not that they are going to get the job, but simply because I want them to tell me these are the things you need to look out for when you're working with builders. So I'll pay a builder just to help me build that specification. So I think it's really important to do that. And this deal analyzer, if you use properly, again, will not only tell you the best return on investment, but it will also help you with the project management costings. One thing I just want to bring to everyone's attention is that historically, it was always a better concept to buy a property below market value, or BMV. And the reason for that is because you're buying smelly old houses, as they used to be called, and you would buy a house below market value because it looks run down. You do the property up and then you refinance. Well, things have changed now because the cost of doing refurbishment works are so high that you could argue that actually buying a brand new house, which doesn't need any work doing, but you could rent it out quicker than buying an old, smelly, old house that needs refurbishment. You could actually lose money now because of the building costs are so high. So again, don't fall into the trap of the old stereotypes ways of investing, whereby you buy below market value, you do the property up and then you refinance, because the cost of finance now is so high. I can't see them coming down below 3-4%. I'm not a mortgage broker in a sense, but I've been here a long time investing in property, so I know things that will crop up and fall over. There's a lot of property strategies there that are old, out of date, no longer work. So make sure that you understand all these things. Use this deal analyzer properly, build up these cost base of refurbishment, and then compare properties whereby actually you might find a brand new home that is a better property to buy, even though you might have to put more money into the initial outlay. So it's just a word of warning, really, in terms of the mistakes that I'm seeing a lot of investors make.
Yeah, great point. And I think, again, if you analyze the deal properly and you take into account all the associated costs, and if there is a renovation project that should basically take place in order to improve the property value, just use the works plan generator to specify all the items and the expected cost based on the quotes that you get. And I think that your tip is good. Don't just take the lower quote, but make sure that you have the right builders with good reviews. And on top of that, I would also take some buffers. And buffers can be, of course, for the costs, but also for the timing. So always expect there might be some delays. So it's very important. With Lender, you can generate this works plan and export it to a PDF or Excel spreadsheet and share it with others. So yeah, definitely. Let's go to the next topic. Okay, mortgages. What are the best mortgage rates for my property? Let's start with you, Simon, and then I will show how you can basically find this information using Lendo.
Yeah, and again, there's two parts to this point actually, and when we spoke offline before about this, again, being a geek that I am, it really does help in terms of the tools that you have to remind you when a mortgage is coming up. And we'll talk about that a little later on. But there are two strands. There's the first strand of buying a property and you needing a mortgage, and where do you find the best deal? And then you have the second strand, which is where you've already got a mortgage portfolio. But because if you might not be as organized as you would ideally like yourself to be, you may find yourself that a mortgage product goes into their normal variable rate, which is significantly higher than the rate that you first signed up to. So you need a tool that reminds you that mortgage renewals are coming up. But again, you need to find the best mortgage because it's going to affect your return on investment and IRR. And again, Landlord is a perfect example of something to help you find the best rates.
Yes, absolutely. Thanks, Simon. So yes, so in Landlord first, when you enter your properties, you have in the mortgage section, of course, you enter the lender name, the start date and the end date of the mortgage, the current mortgage balance, the rate, and very important, the rate expiry date. So if you are on a fixed rate, it can be 2 years, 3 years, 5 years fixed rate, then it's very important to track the expiry date and be on top of that, because if you don't do something, and I will explain what you can do at this point, then you will go to the standard variable rate that usually it's significantly higher than the initial rate, the discounted rate. So what you can do when the mortgage product is about to expire, you can either do a product transfer. I think most of the lenders offer that. So basically, you stay with the same lender, you just switch to a different rate, and it's pound for pound, I think, like the same mortgage amount. And the other option is to remortgage to a different lender. And then basically, if there are better rates out there, or if you already increased value to the property, then you can either raise more capital. So first, the way to track the due dates on Landlord, so you just need to enter the rate expiry date, and the platform will create a notification for you, and you will get alerts on the alerts sidebar. So you will see there are many alerts based on the different due dates, but also if you have mortgage product expiry date, you will see it here. You will also receive an email, and you can control the emails here in the email preferences. So when you want to get a notification 90 days, 60, 30, 40, and 3 days before. And we also have the insights page where you can find the due dates, but you can also start a process to do something. If it's for instance, EPC, you can place an order online. Mortgage rate expire, you can start a process with our digital broker. Now, if you want to see what rates are available for you, so it can be either from my portfolio, just hover over the property row, click on the 3 dots and click remortgage. Then it will take you to the finance area of the platform, mortgage remortgage page with all the details from my portfolio. So the details of the property that you entered will be here. If you want to raise more capital, you can also mention it here. Click search to get results from buy-to-let lenders. And these are live results, and this is based on the profile of the applicant. So in this case, in Landlord, you can manage more than one owner in one Landlord account. So I apply as James, but I can apply as Kate. Perhaps I will see different products. So the platform basically analyze your portfolio based on what you entered on my portfolio, and based on that, we'll match different lenders to you. And you can see that there are lenders that that you didn't meet the criteria for, and you will see the reason. And let's just for the example, let's change to Kate. So Kate basically owns a different portfolio. She might get different products. Yeah, so fewer lenders are not available for her. And of course, you can also apply as a company, and there are different products for limited companies. And the good thing with Lendo that we also have a digital broker, so you can start a process to review your mortgage illustration. Just need to enter some details, click proceed, and then you will get an online mortgage application to track your inquiry. And then within 24 hours, our mortgage advisor will upload your mortgage illustration, and then you can start tracking the application process on Lendo. You can upload the documents, submit the application, see the steps with the lender. So it's very efficient process. And this is for mortgages, and we also have bridging finance, and here we act as a lender. Lendo here is the lender. We are running a promotion in July. People that submit bridging application by the end of July will be eligible for £500 discount on the arrangement fee. And it's also a very streamlined and efficient process. You just need to enter this quick questionnaire, and you will get your bridging application online, and our team will reach out with the next steps. Click proceed, and then platform will create an application for you. Then we will ask you to fill in some more details to get your indicative terms. So you get the indicative terms online, but of course that those are indicative, so terms might change. And we are running like very flexible, we call it flexible underwriting. So we will speak with you, we'll hear your needs. You will get a personal service, and very fast process as well. Then you click proceed, you see the terms in terms of the loan to value based on what you entered, the fees, and the interest rates. We have different products. This product is the dynamic product, so you pay less if you repay the loan early. So you get better interest rates, but if you repay the loan late, then the rate will increase. And again, here you can upload all the documents that we need for the underwriting and then track the entire application here. So Lendo is a great place to find your finance options. Another way is when you analyze a property deal, like in one click, you will find the options to finance this deal. Just click on finance this deal, and you will see the results. If you switch to the bridge deal, you will see what terms you can get for bridging finance in order to finance this purchase. So yeah, so finance is so important when you are in the process to purchase a new property or when you want to raise more capital. So Lendo is the place for you to find live products. We have a live feed from almost all of market, all the mainstream lenders, the specialist lenders for buy-to-let. You will find them here, and you can also apply online to get your mortgage. All right.
Can I just step into that? Because
of course,
one thing that, and I've been through this pain myself, is when you have a large portfolio and you refinance at the same time, you tend to find that you have to submit documents, the same documents, to the lenders many times over, and it can be a real kind of administration burden. It just slows the process down. What I like about this is, and you're on it now, is that you can upload all these documents way in advance. You can update them because your statements need to be timely, the last 6 months of invoice statements. your ID if you've moved home, you get the utility bills all updated. But actually, once you use Landlord and your documents are already there, and you go through different products for refinancing your property portfolio, it's a lot more slick simply because the documents are there. You just do it once, and then by the looks of things, it just sends it out straight to the lender because you've already populated that. So it does save a lot of time.
Absolutely. And you also have the portfolio, because if you own more than 3 properties, the lender will require to review your entire portfolio, usually to stress test your portfolio. So in Landlord, everything is one place. So you have the documents on My Documents. As then you mentioned, Simon, you can store documents on different levels. Common files, you can store your IC or registration, but you can actually upload any other file that you want. For each property, store the EICR, gas certificate, purchase agreement, EPC, and other important documents. And again, here you can upload any document that you want. And on the owner level, the documents that usually lenders will require: passport copy, utility bill, personal bank statement, credit report. Of course, everything is is safe and secure. And it's very easy way to manage your documents. And also, if you maintain companies on Landlord, you can upload the company documents here. On the packages, on the right side, you can share packages with your broker, potential buyer, with your accountant. So like in a few clicks, you can share documents. Just select the documents you want to share. You can create a package with some details about the property and with the documents you want to share. Click on share package. Just need to put the email, and if it's your broker, for instance, you will receive a link that will be valid for 12 hours, but you can extend it to 24 or 48 with all the documents that you shared. But of course, that if you apply with Landlord, you just need to apply. So all the data and consent the underwriting team or the mortgage advisory team to get the data. So without your consent, we will not be able to review this, of course. So yeah, so this is the way to do it. By the way, My Documents is also part of the premium plan. So you can upload 5 documents, but if you want to upload unlimited documents, you will need to upgrade your account to our premium plan, which is £99 per year or £12 per month. You get 30 days free trial, but for the attendance of this webinar or the participants, you get the benefit for 60 days free trial. You just need to use the coupon that Sarel put on the chat. You can put it again, Sarel, perhaps, or if you don't have a user yet, just use the link that I shared to create your Landlord account and be eligible for the 60 days free trial. Just do it in the next 24 hours because this coupon will expire in 2 days. So yes, so let's go to the next topic. How much tax will I have to pay on my property portfolio? So Simon, over to you.
Yeah, and this is a very important topic, as everyone can imagine. With the changes of Section 24, it means that most landlords, if not the significant majority of landlords in the United Kingdom, are going to be paying more tax than they ever used to. And that's because Section 24 prevents you from getting a full tax relief on the mortgage interest costs. Previously, before 2016, you could offset your mortgage interest costs against your rental income, and then you paid the tax on the profit. That's no longer the case. What you now have is a gross profit taxation, which I'm releasing a video on YouTube very shortly about this, where you have your rental income less the cost of running the property, but excluding the finance costs, mortgage interest costs, etc. Instead, what you get is a 20% tax relief on the mortgage interest cost. So if you're a high rate taxpayer, you lose that 20%. If you're an additional rate taxpayer, you lose 25% tax relief that you was previously able to claim. So therefore, you'll probably be paying more tax. Now, for limited companies, people used to jump into limited companies, and quite rightly so, because the corporation tax was at 19%. But from April the 1st, 2023, the corporation tax rates have changed to a point whereby you could pay 19% up to £50,000, and then £50,000 to £250,000, you pay an effective tax rate of 26.5%. Again, a YouTube video is coming on about that, talking about the corporation tax scam that the HMRC are putting on most landlords. And then beyond that, you have the beyond £250,000, you've paid 25% corporation tax. So in all, you're going to be paying 6% more than you used to being a landlord using limited companies. And therefore, it doesn't always make sense to use a limited company. Back to my point earlier, there may be other tax efficient vehicles for you to use. So when it comes to tax planning, the biggest thing I always talk about is use tools like Landlord to understand what your profitability is. And I think it does do that quite well. It will then, I believe there is a tax aspect to the product as well, which can help you at least identify what your tax liabilities will be. But you should be working with your accountant then to say, well, this is what it is, but are there other ways to reduce taxes, which Landlord won't be able to do. It's not built for to be a tax planning product. It does a great job, to be fair, on everything else that I've seen on it, but it won't do tax planning for you. So it's about really reaching out to your accountant. And again, before you start buying property, even if you have properties in your own name, the very next property you should be buying, which tax vehicle should you be using? Should it be in your own name or a limited company? Again, get some tax planning around that. But again, this tool does a significant, better job than every product I've seen about this in terms of the finances. And this tax report is brilliant in terms of saying this is what's tax that you're going to be paying. So it's very good.
All right, thanks, Simon. So just to summarize, like what you can do with Landlord about tax is that you can manage your cash flow. So on the manage side, you can, on the transactions page, you can link your bank account, which is also part of the premium plan, but you can also import files or scan receipts and then allocate the transaction, either expense or income, to a property. If it's an income, you can allocate it to a tenant, and then you can track your rent collection. And then eventually, if you keep track all of your expenses, and you will be able to review your profit and loss, the income and expenses over time, and use the reports page to see your P&L report, property breakdown report, expenses breakdown, income breakdown, and tax report. We have dedicated webinars on that that we can share. Simon, by the way, if you can also share your YouTube channel, so people can also get the great content that you publish on an ongoing basis.
Put that in the chat box.
Yep. And I'll just cover the last topic quickly, and then we have like a few minutes for question and answers if people want to stay. So how do I keep track of renewals, mortgage, EPC, gas, safety certificates, and electricity checks, etc.? So we showed it on the mortgage side, but it's basically for any other key event. So when you enter a property on My Portfolio, you have different sections. So in each section, you will have the dates that you need to track. So on the mortgage section, you have the rate expiry date. On the property details, you can enter the inspection. Where is it? Perhaps we moved it to a different section. On the landlord insurance, you have the insurance end date. On the gas safety certificate, the end date, the due date to renew the gas safety certificate, the EICR, when you need to renew the EICR, as well for the EPC. And so basically you just need to put the dates here and the platform will create the alert for you, and you will get email notification based on your preferences on the settings page. And also you can always visit the insights page with the action required to see all the next key events. Nice trick for people that wants to just update all the due dates at once. Go to the dashboard portfolio overview, and in the account completion widget, you can click on add missing due dates, and then you just need to go to click continue, and then it will go property by property. You put the date, click update, and it will update you. It will update it for you on my portfolio. So, and then of course, once you enter the dates, the alerts will be created for you, and you will get alerted before the important due date. Now, let's go to the Q&A session. Sorry, if we have, so first I put for the attendants. So if you have a question, please feel free to put it on the chat.
Aviram?
Yes.
Yes. Sarah had a question before. She asked Simon, what do you advise on social housing investments, and if it's a good for a long run investment?
I think it really depends. And let's look at the types of investments you can make first of all. So you can buy a single let property and rent it out to a family or an individual. You're going to have houses of multiple occupations, or HMOs, which you can rent out to professionals or to students. You have service accommodation or holiday lets, which you can then rent out to homemakers. And then you mentioned about the kind of the plethora of, let's call them government type investments. So it could be for migrants, it could be for homelessness, it could be for social housing. There is a plethora of options there. I would say that if we look at all of those, it really is something that is tailor-made for each of us individually. So there could be things that you might want in terms of profitability. There may be things about certainty of rent. There may be elements of, actually I don't need the rent, I need capital growth. I don't actually want turnover. There are a lot of things that you have criteria of, and I think it's really for you to understand and document the type of things that you want from a property portfolio. For my property portfolio, I was never too worried about the amount of rental profit I got. I have a business and I have other business interests as well. So property profits really wasn't a thing. For me, it was making sure I had money in property and I didn't spend it. So for me, it was a good way of me not spending money. So I would put the money into property. I knew that area would be growing as well. So capital growth was more important to me than rental income. But my criteria is certainly going to be different to anyone else. So I think in terms of asking me, social housing, is it a good investment? I think it's really back to you to say, well, what is your criteria, and does social housing meet that criteria?
Yeah, so I was muted. Thanks, Simon. Great question. A great answer. Also great question. Before we move on to the next question, I forgot to mention that you can also subscribe to Landlord YouTube channel. We basically publish contents almost every week. Trying. So also the webinar recording and some great videos. So just subscribe to the channel to get the content. Regarding the bridging promotion, to get the £500 arrangement fee discount, you just need to fill in the questionnaire. Sarel will put the link on the chat. And then let's see if we have any other questions. Sarel, yeah, I see, yes.
Yes.
Okay, so Abana asking, would you recommend giving access to a VA to your landlord software program? So I think, giving access to your landlord account, of course, it's up to you. I will just show that first on landlord, you can manage more than one owner in one account. So let's say you have partners that you own the properties together. So on the ownership section, you can specify the owners and the percentage. And it's important because landlord will calculate, for instance, the equity, the cash flow. So you can also see how much equity James owns and also how much cash flow he owns. So it's also important. And then you can filter your properties by owners. Now, if you want to invite other people to join your landlord account, so you need to go to the right top menu, click on portfolio owners. So this is the place to manage the owner details. And then from here, click on team members. And on team members, invite team members, just put their email address, send invite, and they will receive an email with a link to sign up to landlord, and then they will be available to access your landlord account. So do it carefully because it means that they will have access to your data. So share it just with, trusted partners. We don't have right now a, permission level, so you can just share, read-only access or just to review some of the data, but this hopefully will be in the future. So now if you invite people to join landlord, they will be able to get all the permissions that you have on the same account. But it's very valuable if you have, if you are like a team of investors or partners that invest together, so you can both share the same account. All right. Another question from Jeff. Would it make sense to pay the rent of a buy-to-let into a SaaS to avoid the Section 24 issue? Simon, I think it's a question for you.
In terms of, let's think about this again, take a step back, but why do people invest money into pensions? The focus point of that is the money you invest into a pension, you get tax relief on it. So if you're in a particular situation whereby you do not need the rental profits because you have other source of income and you are getting hit by a huge tax liability, then one of the options is to invest into a pension. It doesn't need to be a SaaS, it could be any type of pension. And you would then get tax relief from it. Now, two things to think about here is if you invest money into a pension, it does mean that you can't touch it until you're 55 or into full retirement. The other side to that is that you may not be able to contribute towards a pension. If you are a full-time landlord, for instance, and you have £10,000 worth of surplus profits that you don't need, you couldn't invest that full £10,000 because there's a kind of restriction for landlords of 3,600 contributions to a pension because you have no other form of income. So landlords are penalized again by saying it doesn't matter how much profits you have something called net relevant earnings, and the HMRC do not see profits from property as being earnings and therefore restrict you on it. So again, it is certainly an option to reduce profits. The way I used to reduce profits, if I'm totally honest, is I used to buy a property and I would refurbish it, probably spend anywhere between £15,000 and £30,000. And because it met the conditions of HMRC's refurbishment, replace, repair, renew, and you can get that from HMRC or go onto our YouTube video and check those out. But because I used to do that every 6 months, I would have a bulk load of costs, and therefore I would technically make a loss on my property portfolio. So I didn't invest money into a pension. I bought a new property, which I then could control. I refurbished that property, building up this loss, and I didn't pay tax, funny enough, on my property portfolio for about 8 years straight. And then after I incorporated, so I didn't have the issue at Section 24 whatsoever. So there are ways of mitigating it. And again, it's really working with your tax advisor, if it's not ours, but your own. But make sure you have those conversations, make sure you have those calls to really understand what you're thinking about and whether it's really going to work.
All right, thanks, Simon. Okay, so let's see if we have any other questions. Yeah, Abana, you meant the virtual assistants. Yes, will it be safe? So the platform is secured, and we recommend also to apply the two-factor authentication. It's something that you should do from the top right menu, on the settings, security settings, and then here you can apply for two-factor authentication. The platform is under security groups on AWS. We encrypted all the communication, and we have daily backups. But if you invite your virtual assistant to your landlord account, you need to take into account that she or he will have access to edit some of the data, export data. So it really depends on the relationship with her, how much you trust her, etc. So it's feasible, you can do it, but it's of course up to you. So let's summarize this webinar. Again, we have a promotion just for the live attendance of this webinar for 1 day to upgrade your account to premium and get 60 days free trial. Premium will give you the unlimited My Documents, unlimited documents to store My Documents, link your bank accounts on the transactions page, perform unlimited postcode information searches to get very valuable data when you analyze a new property. This is also part of the premium plan. You can estimate property value. You get unlimited estimations and rental values, unlimited estimations. So in order to get this for 60 days for free, just use the coupon that Sarel put on the chat, or if you need to create your landlord account, use the link that Sarel put on the chat. And the way you use the coupon is go from the top right menu, click on the settings page, from the account information, plan details, click upgrade, click add coupon, put this coupon, and then on the product, this is a test environment, you will see that this number will change. You will get there 60 days instead of 30 days free trial. All right, so thank you, Simon, for joining. It was very valuable. It was a pleasure having you with us. And yes, so everyone, thank you for joining as well. You can use our chat on the app if you want to make suggestions for new features, or just to report bugs, or just to give us your feedback. And subscribe to our YouTube channel to get the other webinar recordings. Simon, if you want just to say goodbye and last words, feel free.
Yeah, I think from me, thank you again for the incredible invite you extended to me. I very much appreciate that. Again, do make sure you subscribe to the Landlord YouTube channel. I think it's a very valuable information piece. And subscribe to the channel that I sent over as well. So feel free to go onto that. I release a video typically every Monday and Thursday. So one's just gone out whilst we've been recording, funny enough. So 2 videos are released every week. So feel free to have a look at those.
Thanks, Simon. Thank you very much. Thanks, everyone, and see you in the next webinar. Have a great evening. Bye-bye.
Bye.